Hi, this is Sean Overton with OneStepRemove.com. In this video we're discussing systems and what they are. In previous videos we discussed how to develop a system and the methodology behind it. We never actually discussed why we're doing this. The reason we make systems is it provides a range of expectations by answering three basic questions. How do you know when to enter? How do you know how much to bet when you enter? And how do you know when to exit? If you have those three questions lined up, you have a system. The reason you do this is you want to have the knowledge of what your expectations are likely to be. So I know that after 300 trades or after 500 trades, my system is likely to return a profit or loss between X and Y. If I ever, anywhere in the middle, have my expectations exceeded both positively or negatively, it gives me an objective point where I say this is not going according to plan, it's time to cut off trading and go back to the drawing board. Really, that's the reason you want a system. It gives you empirical evidence and it removes emotions from the equation. It also removes emotions from the equation on a day-to-day basis. I know that when I hold positions for a week or 2 weeks, watching the P&L go up and down all week, I tend to get emotionally attached to it. In fact, it's directly proportional to how much money I'm making or losing. But the great thing with the system is I know that after X many trades, I'm likely to have made or lost this much money. The system helps remove the emotions from those individual positions so that you can focus on just following the rules. You know that if you follow enough of these trades, that regardless of how any individual trade plays out, you are likely to wind up with a P&L between X and Y. That's the reason you have a system, is to keep you focused on the rules and to remove emotions as much as possible. Generally, a system is able to be fully automated. You want to remove as much discretion as possible. The reason you do this is, again, for the emotion component, but also for testing. It's hard to trade if you just have some vague belief in your abilities in the future. It's a lot easier, especially if you're analytically minded like myself, where you know that if I follow these set of rules and I'm not required to have any input, all I have to do is be a trade monkey and push the button, then I know that it's likely to result in this outcome over time. One of the biggest problems you find with systems are concepts that are vaguely defined, and I see this most often in the ebooks that float around eBay or on the kind of seedy-looking websites, and people send them to me for estimates. The problem is that the criteria are so subjective you can't really tell how do I know when to buy or sell. So the most common concept would be divergence, in something as simple as going up or going down. Well, if you put a chart that's kind of like this in front of 20 people, some people might say going up is here, some people might say it doesn't start till here and here. So it makes it difficult because there's no one answer to any question. And you have to get your system to a point where you can say this is a trade and this is not, and you remove as much gray area as possible, and preferably all of the gray area. The biggest problem with developing systems is the amount of experience required. The people I've worked with that develop profitable trading systems and that continue to trade them profitably have years and years of experience in the market. If you've ever read Van Tharp's Trade Your Way to Financial Freedom, he talks in there about having 10,000 hours to be good at anything. I think it's a great analogy that you don't want to fly with a pilot unless they generally have 10,000 hours. The reason being, they are deeply experienced. They've probably gone through numerous practice runs of what to do in an emergency. They're very well trained. They're used to being in the cockpit. Same goes with traders, and specifically, a system exists to find a market edge. And you find a market edge by exploiting patterns. But to find a pattern, you have to have a great deal of experience knowing what the market normally does. And if you don't have that experience, you're not going to be able to find what's abnormal because you don't fully understand what's normal. It's important to get your hands dirty, get your nose bloodied, and go through the experience of losing money and trying to figure it out and exploiting patterns, and it's just very time consuming, and I don't believe there are any shortcuts other than spending a lot of time and doing a lot of hard work. If you have any questions on this, you can reach me at www.onestepremove.com. My name is Sean Overton. Thank you for listening.